Welcome to SproutCast, where we speak with changemakers, social innovators and entrepreneurs about how to make the world a better place.
Tickets are now available for Sprout Summit 2016. This year we're in Melbourne on the 29th of July. Check out SproutSummit.com for more information or to sign up to our newsletter for the latest program updates and announcements. We hope to see many of you there and that you have the opportunity to meet other SproutCast listeners and hear from more amazing speakers on doing business and doing good.
And now, here's your host, Julia Duffy.
Welcome back to SproutCast. My name is Julia Duffy and today we're chatting with Geoff Gourley about impact investment for social enterprises and businesses that do good. Welcome to SproutCast, Geoff.
Thanks, Julia.
Now, I was looking through your LinkedIn profile the other day, Geoff, and in addition to running 110, you're involved in a lot of other things. So I wanted to know, how do you describe what you do and why do you do what you do?
It's really challenging, and I am involved in lots of different businesses. And it's interesting that there's about 15 companies at the moment that I've got shareholdings in that I'm working with to scale. I don't actually work in any of them except 110, really. I add my support through non-executive director type roles, through board advisory roles, and really that's what my day job is, if you like, is being an impact investor. I look to work closely with the organisations that we invest in, and we don't invest in everyone, but we still work with them in a consultancy type role. So social entrepreneur is a good descriptor for me, impact investor or non-executive director.
Excellent. And how did you kind of get into this field, I guess? Was there something that interested you about impact investing, about nonprofits or social enterprises? And do you know where that came from, maybe?
Yeah, absolutely. And it's an interesting story. I probably need to go back to my upbringing. So
yes, please do.
I was born in Traralgon, so in sort of Gippsland area at the back of the coal mines down there. It was interesting because I remember going to school one day and we went to an excursion to a power station, and in one of the large rooms there was a big 3D model, laid out on the table showing the whole Latrobe Valley region. It's all brown coal down there, so it's open cut style mining. And I remember seeing this was their future plan, and their future plan basically showed all the towns of Latrobe Valley dug up for coal. And so that sort of stuck with me for a while. And I was brought up doing a lot of community service from a young age. So I was in Lifesavers and Red Cross and St. John's, the scouting movement. And so I had that community service foundation that my parents had sort of instilled in me from a young age, which was fantastic. I then moved up to Melbourne and started businesses. And, I probably started to lose my way a little bit and got busy with getting married and having kids at a very young age. Started a business at 19, married with kids at 22 and businesses. So it was pretty hectic, and I probably didn't make time for community service through a period of about 10 plus years there. In 2007, I really had lost my way, wasn't happy in the relationship, wasn't happy with, I suppose, what I sort of doing as profession. Part of it I was heavily involved in property and construction at that time, and I was doing green buildings, which was fantastic, and what that sort of led me down a pathway was, hey, need to protect the environment, I should really focus on doing this. So I got divorced in 2007, and then unfortunately in 2008 my brother passed away, and in that year it was a really transformative year because I did the Al Gore Climate Project training, and I also was accepted into a fellowship program which was called the Centre for Sustainability Leadership. And they took only 20 people from around Australia that were passionate about making a difference related to the environment. Yeah, that was quite a big change at the time. That was fantastic. It was probably what I needed. So I sort of found my bearing a little bit, and that was in making a difference. Around that time, so I started to get more involved in green building and ESG and the environment. I helped found an organisation called Sustainability Drinks, which was really a networking group for sustainability professionals that didn't exist at the time. We basically started off with a group of about 10 of us having drinks in a pub. Then we grew that and actually hold the world's record for the world's largest green drinks, which was around 1,700 people at Federation Square. And we've done that on a couple of occasions. More people attending ours than there was in New York. So that was pretty cool. And then I was elected to the board of the United Nations Association of Australia. And again, all about me getting back into the community sector and giving back. And I had a high level of expertise in the environment, but what that board position sort of gave to me was an insight into all the other global issues that exist, asylum seekers, refugees, food security, water, food, the whole lot. So that was great. And I sort of, then in 2008, I was a finalist in a business pitching competition called Pitch 08, which was hosted by the Victorian State Government and an organisation called ASOG, which is Australian Small Scale Offerings Board. It's sort of like a third tier securities exchange for raising capital. And I came up with this idea as part of my CSL project of a social enterprise incubator, which at the time I called Eco Incubator. And my fellow classmates were sick of the term by the end of the year because I was just always going on about, this is going to be the future of helping people in business that have a passion, want to leave a legacy. And of course, when I started talking to investors, they had two questions. One, what's a social enterprise? And two, what's an incubator? And so I thought, I'm really up against it a little bit before my time. So I parked that project, and what I sort of went on to do was research the sector, get more heavily involved in social enterprise and new business models, impact investing, and how can I connect all of this in an ecosystem that changes the way people do business and think about business, rather than putting money at the centre and the core and profitability and shareholder return. How can we put a strong purpose or a social good at the core of the business, and of course build some finance around it and build the culture around it, but have purpose at the core? And so last year in 2015, I stepped away from a lot of other involvement with other businesses into a very minor type of role and launched 110, which is a much better name than Eco Incubator. And so 110 Group now is that culmination of 20 plus years experience in commercialising businesses. And it's a framework and an accelerator and a consultancy for people that have, passions that want to create a business or a startup with impact at the core. Yeah, that's sort of exactly where I'm up to now.
Excellent. So I did want to pick up on a couple of the things that you were talking about that 110 does. And I guess the first one is probably impact investing, as it sounds like kind of a key part of that. And I guess I wanted to do a bit of a deep dive into that and probably start by asking you, kind of from the perspective of the uninitiated, what is impact investing?
Impact investing is a relatively new term, but it actually was founded quite some time ago, and it's really come out of a concept called blended value, developed by Jed Emerson out of the US in sort of early 2000s. Impact investing is really where you take a look at an investment opportunity, and rather than take a negative approach, which is I can't invest in fossil fuel, for example, or tobacco or gambling or guns, those sort of things, you take a positive approach and you consciously want to put your money where it's also going to create some sort of positive social or environmental impact. That's really what's at the core of impact investment. Now, that doesn't mean that we're not concerned about financial returns. Of course, we want to get financial returns equal to, if not better than, standard investment opportunities. But we also have those other hurdles that we need to address, which is the impact that investment is going to contribute to. And it can be a social-based one. So we could invest in a company that, for example, is providing a job pathway for people at a disadvantage. Could be providing people with disabilities access to services. It could be providing an environmental income where we might invest in wind farms, renewable energy, sustainable timber, water rights, agriculture, those sort of things. So we look at the financial return, but we also are looking at the social and environmental impact that putting our money there will have. And it's a major asset class now. I mean, Goldman Sachs and Morgan Stanley globally have been some of the leaders in impact investment from an institutional level. They're certainly making a big push into Australia, and I was lucky enough to meet with the global head of impact investing for Morgan Stanley, Audrey Chow, about 8 weeks ago here in Melbourne, and she's out of New York. She's also been on the Obama administration and the Clinton administration. Yeah, they came to Australia to say, hey, listen, we've got plenty of cash for impact investing. Give us some opportunities and some deal flow, and we'd be happy to invest. And the same, recently I caught up with the CEO of Goldman Sachs, the Australian CEO, and likewise they're looking for opportunities to put their money into. Of course, they want the financial return, but they also want to see that their money is being invested in a socially responsible way. Having said that, there's quite a few impact investment funds within Australia now, which is great to see. And I co-founded one called the Impact Investment Fund, funny enough, and easy to find on Google. And there's some others. So most funds will have a balanced type of approach where they're providing lower risk for their investors, which tend to be institutional investors. Having said that, there's now a number of super companies that are funneling the super contributions of everyday Australians into impact investing opportunities. And a good example is Future Super. That's a retail super fund. And they've come out and said that they will not fund anything that is fossil fuel based. I think they were one of the first super funds to make that commitment. So none of their money goes into fossil fuels or oils or the like. They're looking for sustainable impact-based investments to put their money in. And that's managing the money that everyday Australians have sitting there in their super funds. Separately to that, there's a whole suite of angel investors and impact investors that purposely look for opportunities to put their money into that is going to make a significant impact. And we're starting to see family offices and foundations that are traditionally given philanthropic funds by way of grants now moving into impact investment. And my foundation's a great example where they recently funded Higher Up, which is a sort of startup tech platform that connects people with disabilities with people that can provide care. And so they were the lead investor in Higher Up in their capital raise. And that means that they've taken an equity position, they're looking for a financial return, and they're hoping that their investment in Higher Up stimulates some great social outcomes for people with disability. There's quite a few of those examples.
And so from the perspective of an organisation that may be seeking impact investing, I have a couple of questions really. So what type of organisations can and do get funding from impact investment? Are there restrictions around kind of structurally what type of organisation they are and also in terms of size?
Yeah, good question. There's quite a debate going on at the moment around the definition of social enterprise, for example. And, some organisations consider that unless you're donating 50% of your profit, you're not a social enterprise. What we like to do is put the legal structure to the side and some of the constitutional statements and more look at, is impact at the core of that business? Who are they impacting and how deep is that impact? Now, you could deliver impact as a not-for-profit with DGR status, an association, a public company limited by guarantee, a proprietary limited commercial entity. So there's a whole range of a charitable trust. There's a whole range of legal structures that you could use. But is impact at the core is the first question that we ask, and we try to validate that. Now, if it is, that's great. The second hurdle or aspect to consider is that if you do have a DGR, it's very challenging to have an investor invest in you as a profit because there's no opportunity for them to sell their equity share later on or take out a dividend or get a return on their investment. So that's more a not-for-profit approach will traditionally look at philanthropic donations or grants as a way of funding. Having said that, a good example of a charitable trust, which is very similar to the not-for-profit, but they don't have a DGR status, so you can't donate and get a tax deduction, is Thank You Group. And Thank You Group set up a charitable trust so the directors can't pull money out. Obviously, they can get paid for the work that they do, but they can't pull out money. They also don't have any investors. What they do is they have a very strong movement of individuals following them and buying their products and services. So they're very successful in cross-category products. For example, they sell bottled water, they do a range of food products, they do a range of skincare products, and now they're launching in New Zealand and a baby range with nappies and like. So they've established a sustainable business model that gives them great profit, and that profit's returned into the business to help it scale and grow. Now, a percentage of their profit is donated to impactful projects. They don't deliver the projects themselves, but for example, I think so far since they established about 6 years ago, they've donated $3.4 million worth of funds to water aid and other projects that get delivered on the ground in developing countries. Now, they recently did a crowdfunding campaign where they raised $1.2 million in a month from the sales of books, and the book was at a price that you want to pay. So you could basically pay anything for this book. So that model has worked well for them, but you need a strong following to get that to stack up. In the commercial proprietary limited space, much easier to engage with investors. Impact investors would invest under that model because they will take an equity position and there'll be a pathway for them to have an exit in 3 to 5 years or longer, where they can get their money back, plus they can get a large return on investment, ideally. Along the way, they may pick up a dividend if the business is running profitably and issues one. A few hurdles for any business looking to get any type of investment is that you need to have a really robust business model at the core. You need to have a well-defined social or environmental impact. You need to know your business well. You've got to have a great team of people that can execute. You need to have a solid market that you're addressing, and not just a global market like, we're going to sell services to everyone that's on Facebook. Okay, that's a little bit broad. You need to bring it right down to who is the actual purchaser of your product or services, what's the total addressable market. Then it's about traction. What sort of traction have you had to date? Who are you selling the products or services to? Do you have revenue? How long have you had revenue for? What's your cash flow position look like? Investors are looking at all of this and ticking off boxes in their mind, doing their due diligence and saying, well, can I mitigate some of the risks I see here? If it's a well thought out business with a good business idea that if I invest, I'm going to enable that business to grow and scale and therefore create impact, but also give me a financial return at a time when I want to exit the business. A lot of people putting forward proposals for grants and also for investment, I've found incredibly underprepared. They don't go into enough detail. They're not diligent enough in preparing their information memorandum, their investor snapshot, or their pitch deck. And they're leaving out a lot of important information. And investors are not necessarily looking to not invest. They want to invest. They want to be saying yes, yes, yes. But if you're not giving them all of the information in a conservative type of nature that's well thought out and targeted, they're going to be thinking, this is a bit too high risk at the moment. Maybe go away and do a bit more work over the next 6 months and then come back and see us. And using intermediaries like 110, for example, we work with companies to help them refine their documents. We're an investor, so we give them all the inside information on what investors are looking for, how to structure that in your documentation, how to test it and challenge your own thinking and help them with their business models so that when they do go to see an investor, they're actually prepared. It's like, training for a marathon. You've got to do the right sort of training over a period of time to make sure that you're capable of finishing that race. If you just roll up to the start line with some basic thinking and basic training and a pretty average pair of sneakers, you're going to find it very painful and you're going to find it very tiring, and it's going to take you a lot longer to get to the finish line than someone that's well trained, well prepared, and has good equipment around them.
And on that kind of pitching stage, when someone starting an enterprise is looking for investment, I just wanted to delve in a bit further on, I guess, at what stage you would look for an impact investment, and or would that happen at multiple stages of the organization's growth, and I guess how to know what information to put forward and how to put the best foot forward for your enterprise.
Impact investors, depending on the size of their investment capability, so the size of their fund, or if they're an angel impact investor, sort of determines the size of impact and the stage that they'll come in at. But you can get impact investment from a seed stage of, $100,000 or even less in some cases. Probably up to $1 million would be an angel seed round investment. After $1 million, you're starting to go into scale up and Series A type investment. And the investors generally are interested in follow-on, particularly if you're coming in early. And what I mean by that is they might say they've identified a company that they'd like to invest in. They cut a check for $100,000, for example. There might be some hurdles on that. So they might say, hey, listen, here's $100,000. That's going to scale you a little bit, get you to the next stage. We want to see you achieve some sales or some better traction, and we want the opportunity to write you another check for a bigger sum of money to help you get to the next stage. So they want some follow-on rights there, and normally they'll want that at a slight discount to whatever the market value is in the future. So that could be after 12 months, for example. So you use your 100,000, you build the business up, you get some good revenue, maybe even a bit of profitability in there, and you go back to the impact investor who you should be keeping updated every month through just some very simple one-page types of investor updates. Say, hey, look, this is what we did this month, and here's a traction. It's about continuing the story and building the relationship over time to keep the investor engaged and give them confidence that you're executing well, that you're using the money well, and that they can see some success. Even small bits of success over time is really what the investor wants to see. It gives them confidence that if they write a $500,000 check, there's going to be the same sort of experience and further growth and advancement, and all of that is building to a much more valuable entity and also a better return on investment for the investor over time.
Another, I think, important question from the perspective of the organisation seeking investment is harking back to something you said earlier about the importance of having impact as a key part of what you're doing and being able to demonstrate that impact. And so I'm interested to know what it is that impact investors are looking for in terms of being able to demonstrate the impact that they've had. What kind of, do they want statistics and kind of like, how much proof that they want or they need to show that the organisation is being successful in that aspect?
Measuring impact investment is one of the big challenges of our time, particularly in the social enterprise space. I mean, everyone's working in that sector for the right reasons, but investors and also even when you're getting grants or philanthropic donations, there's got to be some accountability on the measurement, verification, and reporting of social impact or environmental impact. Now, environmental impact is quite a bit easier to measure because it's normally, tons of carbon or it's atoms or it's abatement. So that tends to be quite easy, or, you can measure reforestation. And so there's very defined, engineered type of outcomes there. With social, it's a lot different because part of that can be about feeling, or status or position. So, how close is that person to poverty and living on the street and homelessness? Are they close to that, or over time, have we got them further away from that point because now they're in part-time employment? Or how is someone at risk lessening risk or greater risk of substance abuse, for example. They're very difficult and challenging to measure. So what we do look for is a set of metrics to establish a baseline to measure against, and then how has that performance been over, 1 month. It's probably a little bit granular to assess, but definitely sort of 3 months, 6 months, 12 months. Have we seen less people homeless and on the street, or have we seen more people having access to disability services? And then we start drilling a little bit deeper and talking about deep impact. So it's not enough for me to influence 10 people through a product or a service, but can I influence those 10 people, and those 10 people go on to influence 100 people each through what service or product they may deliver? So we look for deep impact. We also look for an SROI, which is a social investment. And what we like to see is a dollar impact. So a dollar I invest in community housing, for example, that may, for example, save government $24, or it may create $24 worth of opportunity for someone that's living in a social housing apartment, because then they've got some stability there, so they may be able to go and look for full-time employment. So we're looking for a financial metric as well to measure against, and that also helps us put it in a financial context from what could be a social impact.
I wanted to just pivot a little and chat more generally about starting organizations. As someone who's started quite a few businesses yourself, I thought you might have some insights for someone just at that launching off point about what to look out for, what things they should make sure they're really on top of, and perhaps what skills they personally could benefit from having.
Yeah, for sure. It's interesting. And the whole reason I started 110 was that I saw a big gap, particularly around the ideation to seed stage, where there's a lot of passionate individuals out there that are close to problems, and they're generally the ones that come up with some amazing solutions because they're really close to it. And they go, wow, here's a problem. Okay, I think this is a great solution. And what they need to do is get into contact with people with commercial acumen around business models, around how do they go about setting up and building a business, how can they commercialise that solution. And there's very structured stages of going through ideation to MVP, a minimum viable product, into a beta or a prototyping phase, and then into a startup or a scale-up stage of then how do you replicate that multiple times in multiple geographic locations. So there's definitely a framework there. You do need to increase your basic knowledge around business and commercial, not so heavily on capital raising yet, particularly about how you should have a company set up. What should it be? Should it be a not-for-profit, DGR status, a proprietary limited? All of these early foundational thinkings, they should engage with some professionals, even if it's attending workshops and seminars and some group sessions to get support with that. And the next step, if they're really serious about their business, incubators and accelerators, I suppose the most efficient way to scale your business quickly and ensure that you're really well prepared. There is some investment with that, as you would expect, but it tends to be, it will definitely put your business in a position where you can achieve in 3 months what would otherwise take you 12 or 18 months. And hence the incubation and the acceleration programs are really well structured and highly successful at helping businesses be really robust, have everything they need in place to be able to go and see an investor. So we call that an investable business. Once you've got all of that in place, there's some other documentation like information memorandums, investor snapshots and pitch decks and verbal pitches that accelerators and incubators help you develop. And then you've got a very holistic business. You also have a fantastic way of communicating that and sharing that with investors, but also with customers and also with other stakeholders that you want to bring into the business. There's a saying that you're always pitching, no matter what business you're in, you're always pitching, and you're either pitching to investors, to clients, or to attract staff or resources to the business. And at 110, we're exactly the same. We're always pitching. We're looking at growing and scaling and finding the right people to help us deliver on our impact and our vision. And interestingly, just with the pitching, and I haven't really touched on too much yet, people are just not prepared to pitch either. It's like anything, you need great practice to deliver a great pitch. You've got to understand your business and the problem that you're solving really, really well. And you need to be able to articulate why someone should get involved with you, why someone should invest some money, or why should they support you on your vision and your journey, and what's the value of doing that. It takes, again, there's also a framework for pitching, and there's some key aspects to delivering a 30-second elevator pitch, a 1.5 minute brief pitch, and then a full 3-minute pitch. And also not forgetting that normally following a pitch, there's a Q&A session where the investors have an opportunity to ask you some more delving questions on what you've covered in your pitch or haven't covered. And you need to be prepared for those as well. I've seen a lot of people get stumped when an investor says, oh, okay, so can you just validate this aspect for me a little bit more? And the person pitching has not thought about that question, and they start umming and ahhing, and that immediately sends an alarm signal to an investor that this person doesn't really know their business deeply, or they haven't addressed that risk. A lot of it is around risk mitigation for investors. So if you can come back to an investor, legitimate and valid response to that query and say, oh, yes, actually, we've thought about that and we've addressed it in this way, that will give the investor confidence and abate some of that risk to say, hey, yep, these guys they're on the ball, they've thought about that risk, they've come up with a mitigation strategy. I'm feeling comfortable about giving them $500,000. No one wants to blow money.
Excellent. It's great to have you touching on pitching for investment there, Geoff, because I'm not sure if our listeners know, but Geoff will be speaking at Sprout Summit on the 29th of July this year, and his topic is actually on pitching for investment. So anyone who's listening who wants to hear more about that subject and to see Geoff speak in person, definitely consider coming along to Sprout Summit. Check out the program and register online at SproutSummit.com. Before we leave off the topic of kind of general advice for starting an organization, I guess another important question is to consider some of the challenges that you might come across at this stage. And I was wondering if you had any insights about, aside from the one you just mentioned in pitching, where you may be not on top of the possible questions that you could be asked, any kind of challenges that you're seeing people face regularly that they're maybe not prepared for at this stage?
Yeah, absolutely. There can be lots of challenges in starting any sort of business, and startups in social enterprise and impact investment, or in tech startups and general businesses. There's a few key aspects. Generally, you might start off with an idea as one of you, or maybe two of you, and team is really important. Having a good team around you for a whole variety of reasons. More smarter people in the room is much better than just an individual. Having those resources there means that you won't burn out. You won't burn out as quick, potentially, because you've got other people there that support you, that believe in your vision. That's also validation, that other people have also identified that problem and believe in the solution enough to put in their time and effort and potentially cash to help you achieve that vision. And the quality of the team is super important as well. So having an advisory board is really highly valued. It means that you've taken the time to communicate the idea to experts that might be in that field, and that they're willing to mentor and support you. It shows that you're credible. It shows that you've got passion, enthusiasm, and that you're probably capable of executing that idea. So getting over the team, the solo founder or the solopreneur challenge is quite difficult. Education. Education is so valuable, and educating yourself by going to events, workshops. You don't have to spend a lot of money on it. You can find the right sort of conferences to attend. Podcasts are a fantastic way. And, really putting in the effort. It's not easy. No one said it's easy to solve the problems of the world or to start a business. You've got to put in the effort. Getting into the community and the sector as well. So going to events where you're mixing with other entrepreneurs, where you're mixing with investors, go to pitch competitions, see how other people pitch. There's nothing quite like being there and going, oh, wow, actually, I pitched so much better than that person. Or, wow, that person's pitch was amazing. I've really got a bit of work to do. So gives you some relevance on where you are in your journey as well. Hackathons are fantastic, so I'd highly recommend attending a couple of hackathons. And I do myself. I've been in business for 25 years, and I love going to hackathons now because there's a very diverse group of people there. There's coders and hustlers and hacksters and humanitarians, and mixing with different people gives you exposure to their skill sets, and that's where you can actually pick up someone that could complement a deficiency that you might have in your team. So that's another challenge to get over. And then there's the money challenge, which is probably number one for most emerging startups and people with ideas. So again, you've got to work really hard on developing and refining your business model, your pitch, what you would use the money for, and why would someone want to support you financially, and having a couple of different pathways to access that money. Yeah, a grant might be great to get you started, but then you may need some investor finance at another stage. You may need trade finance. There's also debt finance available. So it's having a broad view of all of the financial steps that your business will go through and who is best to approach at each of those stages. I find that a lot of businesses are ill-prepared about the financial pathway that they will need. It's not a simple thing to build a large value business. You need lots of people on the journey with you, team, finance, investors, people in sales and marketing, and customers. The other big challenge for businesses is that they come up with the idea, they develop the solution or the MVP, and they then need to go and get customers. And customer acquisition can be expensive. It can be difficult if you haven't got the model right. And if you haven't validated the business solution or service that you're offering enough, potentially customers will go, look, that sounds great, but why? I don't really need it. Or, solving a problem, but is that a big problem that's affecting a lot of people? Because that's where you get scalability. If it's a small problem affecting a very small group of individuals, it may not necessarily be a scalable business that the investor can back. And it might be that it's a project, that it's a one-off project that demonstrates a solution, but it may not be scalable. So, it's the challenges are many in starting a business, and I think getting professionals, going to events, workshops, seeking out people to get them to help support you on your journey is definitely the right approach.
Awesome. And now before I let you go today, Geoff, I wanted to end by asking you if you could think of any organizations or enterprises that you know of who you think are doing something interesting that people might want to learn more about. And if you'd just like to give them a shout out.
Yeah, for sure. There's a couple that I've been close to recently and really loving the work that they're doing. Rare Birds is one, and I am a global Rare Birds ambassador. And, there's been a lot of conversation and discussion around gender diversity. And I've been involved in supporting women in leadership roles, boards, and business in general for a long time now. And I really see that what Rare Birds is delivering is a pathway for young girls coming through secondary school, turning into young women, going into business and wanting to start their own businesses. And so Rare Birds' aim is to sort of inspire 1 million female entrepreneurs by 2020. And it's an amazing goal. And Jo Burston, who's the founder of that, is a highly respected business leader in her own right. And now she's developed this business a couple of years ago to inspire women and girls all around the world that they can be in business, they can achieve whatever they want to achieve, and there's a really emerging support network there for them. A couple of the other ones, Street is a social enterprise cafe where they provide a hospitality experience for immigrants and disadvantaged youth. So they go and learn and work in the cafe. So they learn the art of hospitality, and it could be, baristas and waiters and chefs, and they're creating a job pathway so that those people can graduate from that cafe and go and work in a commercial restaurant or a commercial cafe with the skills that they've learned. So that's a fantastic one. Thank You Group, I mentioned before, really impressive business, a great group of young people that really wanted to challenge the status quo. Jared Burns, Daniel Flynn and Justine Flynn, been going for about 5 or 6 years, and, they took on Woolies, took on Coles, took on Coca-Cola, and very successfully as well. So they had a big, audacious goal. It's been fantastic to see them achieve the success that they have. And it's really important actually to lift up and profile the people that have had some success to demonstrate and inspire other emerging entrepreneurs that, hey, you know what? You can make money, you can develop a really great, purposeful business and get some amazing outcomes. And I think as a society, with us really focused on doing that together, we're going to create an amazing future for generations to come.
Excellent. Well, I think that's a fantastic place to end on today, Geoff. So thank you so much for speaking with me on SproutCast. It's been really great to hear your insights, and I'm sure that our listeners agree, and hopefully anyone who is available to come to Melbourne on the 29th of July will do so to hear you speak about pitching for investment.
I'm looking forward to it, and I'll be sharing all my inside knowledge, tips, things that you wouldn't otherwise hear. I'll be sharing everything, and nothing's off limits. They can ask.
One more quick thing before you go. Tickets are now available for Sprout Summit 2016. This year we're in Melbourne on the 29th of July. Check out SproutSummit.com for more information or to sign up to our newsletter for the latest program updates and announcements. We hope to see many of you there, and that you have the opportunity to meet other SproutCast listeners and hear from more amazing speakers on doing business and doing good.